Good morning, welcome to IG's early morning call. It's Wednesday, 5th of July. Let's take a look at the headlines as we wait the start of today's European session. We've got declines in Hong Kong. We've seen some very weak numbers coming through in China for the services PMI at 5-month lows. Meanwhile, the dollar's steady ahead of the FOMC minutes out a little bit later on today. It'll give a deeper understanding to the markets as to what the Fed was thinking when it went on pause or skip last time around. And we continue to monitor yen weakness. It's bumping up against recent resistance, and we've got or support, depending on which way you look at it. But we're very close to that zone at which the Bank of Japan and the authorities last intervened to try and strengthen the yen. Take a look at volatility. That too is bumping along the bottom, 15.79. We've got money coming off the table for the third day in a row so far as risk assets are concerned. You can see FTSE 100 down at 7,500, the round number. It's interesting to see just how much more downside there is to go there today. And we've got downside on the German markets approaching that 61.8% retracement level again, which is of significance just below where we are. So short on all these markets going into the start of today's session today. Let me just quickly bring you up a chart of what's happening on the French markets as well, because the CAC 40, the French benchmark, like the rest of the European markets that we've got, declines across the board for the France. I'm finding it difficult to get my chart up here. France 40, but it is basically the same sort of story. Third day in a row of losses that we've got there for the French CAC 40. Let's take a look at what's happening in the overnight Asia Pacific markets. And as I said, the Hang Seng stock index, really the one that we're monitoring most because it's on the way down by the heaviest margin. We'll take a look at the deep reasons as to why, but let me just tell you, broadly speaking, it's been a particularly nasty day on the markets, or certainly for the economies, for China, for services number. Let's look at the Hang Seng stock index. You can see there that we've got that pullback down to 19,118. Big candle on the way down, but it's not even quite as big as some of the other candles we've seen in the last couple of weeks on the way down. But the markets had been capped out of this 200 period moving average from which it has seen those declines. Let's wind the clock back to what happened on Wall Street on Monday, on the half day's trade that we had, very light volumes on the US markets on Monday. We have had 24-hour markets, and we have seen these markets move. I want to show you what has been happening on the 24-hour markets for the Dow Industrials. Essentially, third day in a row of losses that we've got. The 24-hour markets were trading yesterday, and we saw a small slide. What interested me, though, is the fact that we got the tech-heavy NASDAQ holding up near recent highs at 15,167. There is a red candle there. But broadly speaking, we're holding on to the moves that we saw at the back end of last week. And in fact, on Monday in the cash session, we did punch higher to levels not seen since the 16th of June. The markets seem to be attracted to these tech stocks. It is only a small number of tech stocks that are leading the gains, but it is those big tech names that continues to attract the money. But let's take a look now at what's been happening with the Caixin services PMI numbers, because these have been out overnight, the slowest pace in 5 months in the month of June for the PMI data for the services figure. The PMI falling to 53.9 in June from 57.1 in May. That's the lowest reading since January. The data broadly tracked the government's official PMI released last week. On Monday, remember, the Caixin manufacturing PMI managed to keep its head above the water in June, falling to 50.5. Anything above 50 means that it's expansion. This means that the composite PMI, which compiles manufacturing and services activity, is down to 52.5, making a 6th straight month of expansion, but nonetheless very, very weak compared to how we've seen previous numbers. Now, look at what's been happening. As we saw at the beginning of this week, we saw money going into the Chinese yuan at the expense of the US dollar, but in today's session, we've got a reversal of that. This is the dollar up against that weaker Chinese yuan. Market awaiting a few macroeconomic indicators today, starting in a few minutes at 7:45 UK time. Industrial production in France, the index forecast to fall by 0.2% in May compared to April. Then at 10 o'clock, producer prices in the Eurozone expected down 13% in May year on year. And at 3 o'clock this afternoon, US factory orders, economists seeing a 0.8% rise in May month on month. So some of the data out a little bit later on that could give us a little bit of a steer on what's happening. It's the release of the federal funds minutes of the last meeting that we saw the Fed keep interest rates on hold following the Independence Day holiday, as it does. The release today will force people back to their desks, I guess. brought back to reality from what's been a long weekend for many. The pause in rates followed a run of consecutive rate hikes at every meeting since March 2022. The updated economic projections suggesting rates may reach 5.6% by year end, thus suggesting 2 more rate increases. The Fed Chair, Jerome Powell, seen here recently reinforcing the view that the board is leaning towards 2 rate hikes and hasn't ruled out consecutive meeting rate increases. The latest economic projections from the Fed indicate that the Fed funds rate is expected to gradually fall to 4.6% in 2024. Let's show you what's happening with the dollar. This is the dollar basket, up for a third day in a row today. Despite the fact we saw the US markets out yesterday, money was going into the dollar. And I think the minutes may reveal the board's intentions to keep interest rates higher for an extended period of time, with a rate hike possibly delayed until the end of the first quarter or second quarter of 2024 if inflation falls towards that desired trajectory. Let's take a look at euro dollar very quickly. On the way down, not quite as low as we've been in the last week or so, but at 108.77 looking weak. So if you're selling euro at the expense of the US dollar, your stop goes up here above the 110 level, currently trading at 108.76. Let's move on to one other area of the markets I really wanted to follow up on, and this is what's going on with the Japanese yen, because we're getting very close to that point at which we saw the Bank of Japan and the Japanese authorities last intervene to prop up that ailing Japanese yen. Let's look at where we are on the dollar yen. Now, I'm going to show you some of the other crosses that we've got at the moment. This is peaking out at the recent highs, where we've seen that high back on Friday last week at 145.07, just managing to escape the 145 level. And you can see the highest print there that we've seen since the 10th of November. Now, that 10th of November candle represented the point at which we saw the Japanese authorities come in and give the yen a little bit of an injection, seeing the US dollar down. But as we know, it's very difficult to get in the way of markets. And as a result of that, I think we've got a lot of hard work to do by the Japanese authorities. This is sterling against the Japanese yen, which just continues to rise. In fact, in today's session, we've seen a new recent high for this market. Just want to show you where we are in the context of the longer term picture, that we've got a new high not seen since the 18th of December 2015. It doesn't stop there either, because the euro trading against the Japanese yen has also been enjoying a little bit of a lift. And indeed there today, you can see that we are off the lows that we achieved yesterday, but nonetheless in the last couple of weeks or so, we've seen the highest print there for the euro against the yen, not seen since the 11th of September 2008. So the big question is, will the Japanese authorities come back and intervene again to prop up that ailing Japanese currency? Let's shift gears and take a look at what's happening in the corporate world. I want to begin first of all with AO World. This is the white goods retailer, which did so well, of course, during COVID. The stock is opening at 80.2 pence today. It said that profit recovered in its 2022-2023 fiscal year as it benefited from a plan to reduce costs and improve margins. These were full year numbers out this morning. The British Online Electrical Group's full year EBITDA reaching £45 million. That was in line with guidance and up from 23 million in 2021-2022. But revenue fell 17% to £1.14 billion. As is always the case for AO World, a very bullish update from the chief executive. It's just a question as to whether or not that's going to mean an upside for the price here. If you are strong and want to go long on this at 80.2 pence, stock goes down here at around about the 74 pence a share, which is underneath the 50-period moving average, which might see a little bit of support if we do go on the way down. MACD pointing down, but that's technicals. This is fundamental news. Has it got enough impetus to give us a little bit of an uplift on where we are at the moment? If you think there's a short trade to be had here, your stop would go above the 85 pence level. Let's stay on the charts. Just wanted to update you as well on what's happening in Topps Tiles. Rising line of support that we've got here. It's on track to post its annual profit in line with market expectations, according to today's third quarter trading statement. 9-month sales up 7.6%. Group sales remaining strong in the third quarter, with total sales growth of 4.4% against last year. We saw Topps Tiles continuing in the third quarter to do some brisk business. Like-for-like sales up 2.5% year on year. As expected, gross margins, the company says in Topps Tiles, continued to improve, but the company didn't give any numbers. So we don't know just against what sort of metrics it's looking for there. If you like the look of the number out today, we're trading at 48.5 pence at the start of today's trade. Stock goes underneath the 200-period moving average, down here at around about 45 pence a share. It labels at 48.5. That is, of course, if you're a day trader, you keep on top of your trades and you get stopped out if it goes in the wrong direction, but you make money if it goes up. That is if you go for a long trade with a stop underneath the 200 period moving average. If you think there's enough weakness here to take us below this rising line of support, your stop would go above the 50 odd pence level, 52p level, above these moving averages up here, with a view to taking that down. I'm not so sure. I think the Topps Tiles numbers look on the whole to be relatively robust, and we could well see a little bit of an uptick at the start of today's trade. Oil, just to quickly run through some of the other charts, just want to show you, talking about falling and rising lines of support and resistance. Look at this. This is as of today's trade. We've got a number of touches here on this falling line of resistance for the price of oil. It gets up there, kicks lower, and that's done again today after the recent rise we've seen in the price of Brent here we've got, but it's the same for WTI, 75.68. I think in the long term, I think my price target of 70.10 is likely to be hit, especially unless we get some sort of major breakout on the way up. I don't think that's really going to happen. Precious metals, interesting to see what's happening with gold last few days. When I've been away for 3 or 4 days, I haven't really kept my eye on the markets, but I had a pleasant surprise being long on gold. I had a pleasant surprise that I'd got this rise that we've seen recently. I say long on gold, it wasn't a direct trade on gold. It's my interest in gold miners that I have, where I think, for me, that's where the money's been made. But, you know, they really have been performing very poorly recently. But I was pleasantly surprised to see when I came to take a look at what was happening last night. We got this recent rise in the price of gold. But to be frank with you, it's not really breaking out. I think the longer term picture, we've still got declines, possibly with this price target down here of 1870. I was talking at the back end of last week, now looking down here at the total retracement at 1804. I felt that there was sufficient of a downside coming through here. And I still think that's the case. But we've got a small drop today at 1921. One of the other areas of the markets I think it's worth looking at is agricultural commodities. I'd like to show you a couple of charts here, just to show you what's going on, bearing in mind that agriculturals in the US yesterday, of course, were out because of what's been happening with the US holidays. Let's show you the price of corn, first of all. It's dramatically fallen during the last few sessions. Conversely to this, we're witnessing a rise in the soybean chart. This is soya oil, but you get soya feed as well. These two charts are linked. At the end of last week, the US Department of Agriculture revealed that farmers in Illinois, Iowa, and North Dakota, the breadbasket of the US, have shifted from soybeans to corn. Analysts are now concerned that soybeans supplies will be tight and expect the soybean and soybean oil markets to remain bullish. Now, we've passed through the 200-day moving average as of the back end of last week, and this Monday candle here was entirely above that, and in fact hitting levels there that we'd not seen in this market. I think actually I can draw a line there. Didn't quite get as high as the highs we had back on the 22nd of February this year, but there would certainly appear to be further upside trade to go here, especially if we do see this market being further restricted by the farmers' decisions to go into corn. And corn clearly having dropped below this line of support that we had, which was established with that candle there back on the 10th of September. We're now down at levels there not seen since the 12th of January. That's it. I'm back with Charting the Markets at 10:30 this morning. Hope you can join me there for that. Do watch AO World and TPT or Topps Tiles at the start of today's trade at the top of the hour. We're looking for losses across the board on the European market.